Another video. Today we're going to do our usual weekly market breakdown for the stock market. Now, if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, just let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now, it's no question to whether or not the stock market has been quite bearish. But we can't say it's been bearish because it's only a consolidation. I mean, the market had dropped slightly lower on Friday on that positive NFP news that we saw there. The market came through added a 395 base, higher than the 325 that was anticipated. Unemployment was still the same as it was previously, and then average hourly earnings was still stayed the same. But the new jobs were added, and the one thing the stock market don't like is a positive outlook for the dollar index. When the dollar index gets positive data, the stock market goes, damn it, we have to go down. Now, we got some data coming through. We got the unemployment claims, something I'm not going to focus on too much, but we do have the CPI and the core CPI there as well. It's the consumer spending index, which has come out on Friday, and this will measure the inflation. Now, we will like to see it coming through at a 0.5, which will be good, but this will be the most important data for Friday. Okay, this is only coming out on Friday, so we're going to use this historical data and then make a decision on the NASDAQ, on the stock market, and how we're going to trade that. We're also going to look at the the NASDAQ. We've got US30, SNP500, GER30, Usoil, as well as gold. I'm also going to look at the forecast that I did last month and see if they actually last week and see if they actually played out as anticipated. Now, with that being said, let's look at this article here from the CNBC. It says here, Dow falls 300 points, NASDAQ drops 2% as major indexes notch weekly losses. Now it says here, the US stocks led Friday. We know that. The Dow Jones, yes, we don't care. But we can see here is that all three indexes finished negative on the holiday shortened week. The S&P 500 was down 1.2%. The Dow Jones and the NASDAQ was down 1% this week there as well. Now, investors passed through this latest job report, US hiring. Now, we're speaking about this for the entire week. We were saying that when I did the NASDAQ breakdown, I said investors are waiting for the job report to come out. It came out and it did. Now, next up, we are looking is the numbers this strong would likely reverse any hopes of the Fed would consider a pause in the rate hike after June-July increases because it would signal the labor market remains very tight. Now, I'm not going to dive too much into that data there as well, but we do have the Federal Reserve interest rate decision coming in 2 weeks' time, and based on what we get on the CPI, we could potentially see the market react to it. Now, we're going to start with the NASDAQ100. Now, I did this breakdown on the NASDAQ, said we can expect that pullback, which is exactly what we got there. And then we got this next red candle. So, well done if you got into that move there as well. Now, we're going to start here on the monthly time frame. What do we see? Firstly, I see that the NASDAQ is stuck in a consolidation. The market had printed strong resistance, broke above that, came to test it as support, not once but twice. The market also printed support, broke below that, tested it as resistance, and you can see how the market is moving sideways, indicating to us that we can expect this move to the downside going into this week as well. Now, if we drop down on the weekly time frame, what do we see? Now, from a weekly perspective, like I said, also the market had broken a very important structure. Now, this level in the market acted as a strong level of support over there. The market broke below that, came to test it as resistance. We also had this massive impulse. After an impulse, you definitely expect a correction. And if you take your Fibonacci from the high to the low over there, you can see where the market pulled back to the 0.382, giving us an indication that this momentum to the downside is quite strong. So we are going to go with that and use that as our target level if you've got the kind of patience that I do. Next up on the daily time frame, what do we see? Now, yeah, the daily time frame price action is quite interesting because the market has been moving sideways. Now, this was the high of this candle, and if you drop down on the lower time frame, you'll see how the market had that fake out there, right? Because retail traders go, hey guys, look there, the market broke resistance, retest, support, let's buy. And then the NFP says, well, no, my friend, it's not your day today. Next up, we can see how the market had started this consolidation phase over here, and everything went as anticipated, as I said last week. But we are going to take this slow into consideration over here as well. Now, there's a very easy way to trade this market. Now, because we are bearish on the stock market, we need to wait for the market to break below this level, right? And then on the retest, we can then start looking for selling opportunities to the downside for the market to go and hit the minus 27 of the 0.382 as we identified from a weekly perspective. Now, this is the downside target for the NASDAQ in the long term, but it's very important that we wait for a clear break, because the market could potentially also just continue moving sideways, be awaiting that PMI data that's going to come out on Friday. So we have to be reactive and not predictive. We have to learn to adapt to the ever-changing market environment. But the bias for me is for the stock market to continue lower, potentially get stopped in its tracks here first, and then from there we could potentially look for another opportunity. But I'll keep you guys up to date there as well. Next up, we do have the US30, and everything that I was speaking about over here did not go as we anticipated. We also expected the market to continue higher, hit that level, then pull back. However, this market also just came back, stuck within this consolidation phase. But because we are bearish on the stock market, we are going to use the same we're going to use and apply the same analysis here as well. This market is also consolidating, and we're going to so we can see over here that this level over here in the market acted as a level of resistance. The market broke above that, came to test it as support, and the market has just been moving sideways. Now, yes, the market is going down, there's no question about that, but we would like to see a clear break below that level of support, then turn the resistance, and then start looking for that selling opportunities there to the downside there as well. Alternatively, this market over here could also just be moving sideways, but I doubt that is what's going to happen while the market awaits those data to come out on Friday. The SNP500 there as well, we can see, is also moving sideways. We got the same type of price action across the stock market here as well, so not giving us exactly what we anticipated. This market was just consolidating for an entire week. The market had received the positive NF data that it was looking for, so once again we could potentially just waiting for that slip up to the downside, and then on the retest start getting into that market there as well. Once again, we are trading the US stocks, so they all look the same from a technical perspective. Next up, we do have the German 30 index here. Now, this went as exactly as I anticipated. I said that we can expect the market to reject from that level over there. Market came down, started continuing higher. Now, next up, we can see over here that the market had printed this massive impulse, that correction. And if you take your Fibonacci there from the low to the high, you can see the market tested the 0.382. Going into next week, yes, this market is going to continue higher. There is no question about that. So we can definitely expect this market to continue this move to the upside from exactly where it is now. And for the market to go hit that minus 27, as we identified from the daily time frame there as well. US oil over here, US oil also moved up slightly higher, came back for that retest. The market then started to rally to the upside. Now, from a daily perspective, we can see how the market had broken above this strong level of resistance over here, and once resistance gets broken, it's then turned support. The market printed this impulse. After an impulse, you expect a correction to the 0.382. Now, there is a high possibility that the market is going to continue higher before we can expect the pullback, and then that continuation to the upside there as well. So the best place for us to look for that buying opportunities is to wait for the market to pull back. But if you do want to look for that sell in the short term, you're more than happy to do that from that level there as well. Get that sell and then get into that buy. Next up, we do have gold over here. Now, gold firstly had gone up as I anticipated. The market then broke above that structure. Now, the price action over here is quite interesting, because we could have this potential inverted head and shoulders, but because we had some positive data on the dollar index for last week, the best way I would say is to wait for the market to break below that level, and then on the retest you can start looking for that short-term selling opportunities to the downside on gold there as well. Now, like I said, it's important that we are reactive and not predictive here as well. Gold could potentially start a small retracement to the upside, then that move to the downside, but the best way to approach this is to wait for a clear daily break below this level, and then on the retest start looking for some selling opportunities to the downside there as well. Now, that's all from my side. Thank you for your time, and as always, cheers for the ears.